Hi everybody, and welcome to this week's ICE commentary video for the Russell 2000 and equity markets. You're speaking with Nick McDonald from Trade with Precision. Let's start here with the Russell on the daily chart. Just have a look at the action we had last week. So, start of the week we were just up around 700 or just above it, which was our upper was our closest resistance point. And what we did was we came down below it. We had a couple of small candles before really getting a move on here with some more fears out of Greece and some more political fears. And what we had was a really big down Wednesday, big down Thursday, and we kind of based out and continued to consolidate on Friday. In fact, rejected the lows on Friday. What this is still quite consistent with is a ranging market. You know, we've got a wider range if I drew the extremities, but we're in between kind of 700 and 650, which are lines we've had marked in the chart for a long time, and we're ranging within them. And even on Friday, it's quite convincing that as we broke below 650, we're coming back above it. So what we did there was we had a pretty decent down week. And I'd started last week with a bullish view on equity markets. And what this also did, I'm going to come back and look at my view on the Russell shortly. But what this did last week was it inspired a couple of emails. And when I get two emails with the same question, I'm pretty confident that there's at least a few hundred other people out there with the same question who just didn't take the time to email me with the question. So the question was, Nick, you started last week with a bullish US dollar view and a bullish Russell view. I thought that they were inversely correlated. So two people said that. They said, if the dollar goes up, equity markets go down. And I replied and said, well, actually, no, they don't. So I want to just show you a little bit on correlations. And then we'll come back and have a look at the view for this week. So firstly, I want to show you something which is correlated. So this is the Russell versus the NASDAQ. And we see this blue line down here. What this is showing me is something which is correlated. See, we've got a scale here from +1 down to -1. Anything up above kind of 0.7 means they're positively correlated. So you can see here the two overlaid. We've got the NASDAQ in orange. You can see when they're moving up, they tend to be moving up together. When they're moving down, they tend to be moving down together. That's a positive correlation. Let's quickly look at what a negative correlation would look like, or an inverse correlation. And that is, for example, here, this is the dollar index versus the Russell. And you can see when one is going up, the other is going down. And you can see that this line down here is just the opposite extreme of where we had the Russell versus the NASDAQ. And this is just showing an inverse correlation, which equals still a correlation. So that's, anything down below here, down below kind of 0.7 would be an inverse correlation. Anything up above 0.7 would be a correlation, a positive correlation, but anything in between is no correlation. Let's come and have a look, for example, at the dollar index versus the S&P first of all. So this is the dollar index versus the S&P, and as you can see, this the correlation is virtually no correlation at all. Let's come and have a little look at the two main ones we talk about here. So now we've got the dollar index versus the Russell 2000. And again, what you can see is no real correlation. There's certainly no obvious correlation. There's times here where, for example, the Russell is going up and the dollar is going up. There's times here where the Russell is going up and the dollar is going down. There's times here where the Russell is going down and the dollar is going sideways. So there's no real obvious correlation. And in fact, at times it's up towards almost being a positive correlation, and at other times it's more down towards being a negative correlation. Ultimately, there's no real correlation or no consistent correlation between the dollar index and the Russell 2000. So that's why I started the week with a bullish view on both. I'm not afraid to say, look, I think they're both going to go in the same direction. What I'm ultimately looking for is what is the most probable for me based on the charts, not based on the press or the news or the economic situation as such, because I think all of that stuff lags the charts in some respects anyway. We'll hear about the bad news once price has already moved. So looking at this though, there is some bad news out there and there's some risks out there, and I highlighted the risks last week as well. The risks are really coming out of Europe right now. There's a big potential knock-on effect of banks if the Greeks default, and outside of that there's potential knock-on effects to bigger economies like Spain and Italy. And there's some big risks out of Europe which can have a big effect on banks, and banks are pretty much propping up our financial world, and the risk there is big for equity markets around the world. However, when I look at this still looks somewhat bullish to me. Now, don't get me wrong, this is a very much a ranging market, but what looks bullish to me is now that we've come down towards that range, we've got down to 650, we've got a bullish candle here. Any break up through the high of last Friday's candle, basically, so any high up through break up through Friday's candle this week, we'll be looking pretty positive for a move back up towards 700. Just a range-bound strategy. We've broken down. Notice what else has happened is we're breaking down here to new lows. See how these indicators are still making higher lows? That's bullish divergence. So we're breaking down to new lows on price. We're still making higher lows on indicators. That's bullish divergence. Plus we've got this rejection candle as we break down through these lows, a bullish candle on Friday. So when you break back up through Friday's candle, I'll be looking for a move back up, at least in towards the middle of this range, but possibly towards the top of the range. So I'm still somewhat bullish, but only if that scenario happens. At the moment, we're below 650, and 650 is likely, therefore, to act as resistance. And we could potentially end up moving lower from there. So let's just come and have a look at where we could get to. Having a look here at the weekly chart, this does look bearish. The weekly chart looks bearish, no doubt about it. And here, there's a pretty good chance of a fall to 600. I really think 600 will be some good support. I'm not so bearish on equity markets if they fall that I think we're going to smash through it. I think there'd have to be some really bad news to break 600. I actually think 600, if we do move lower, 600 is the kind of point where I think markets will actually turn around and start to have a decent rally from. So if not sooner, but 600 I think will be a really strong point. So I'm watching that level very, very closely. Again, I won't just buy because price gets there, but I'll be certainly looking for any reason whatsoever to buy it because I think that's a really strong level. And coming and looking at this on a monthly chart, well, we're still uptrending. If we get down towards 600, it's really the extremes of where we can't really consider it an uptrend if we break just a little bit beyond 600, around about 560, back around these old lows here. So at the moment, though, we are still in an uptrend, and it's still, the probability is still for this to turn around at some point until we see something else happen. At the moment, we are still uptrending. The momentum is still up, and the very longer term, i.e., from this move up, move down, move up, move down, pulling back to a higher low. Still looking for this to push on up, but it really needs to start happening sometime soon. I believe if it doesn't happen here at 650, then it's likely to happen at 600. Certainly, I'm not massively concerned about whether we do go into bull market or bear market, but what I am most concerned about is where can I get trading opportunities, and the trading opportunities still remain around 650 and around 600 in the meantime. If we get up towards 700, then that will provide potentially a pretty good shorting opportunity for a market to stay within the range, especially if the economic risks are still out there. I hope that helps everybody. I hope that you can, that having a bit more of an understanding of the correlations is useful. And let's see what happens this week. But certainly the way I'm trading and the levels remain the same. Bullish at the moment if price is above 650. I'll remain bearish if price is below 650. Any move down and then a pull back into it would be a very bearish move. And I'll be looking for a move down to 600 before starting to trying to get positioned for a potential bounce off 600 for a potential bounce back upwards. Hope that helps everybody. Happy trading. Speak to you next week.